Hello, hi. Today we are going to cover risk management reading um, in CFA Level 3 course using Bright Analyst notes. Study session 14, reading 27, risk management process and systems. So risk management process involves identifying the level of risk that entity wants to take, taking action that brings the actual level of risk to the desired level of risk. Uh, like most businesses cannot make money unless they involve in risk taking activities, but risk management process is to bring down the risk to the desired level so that the business can sustain and the unnecessary risk can be avoided. So hedge the risk when company doesn't have the comparative advantage in an activity or line of business. So risk management process is kind of an iterative process. It involves setting up policies and procedures, defining risk tolerance, identifying the risk areas, measuring risk, and adjusting the level of risk. They are two systems which are really popular. First one is centralized risk control system. In a centralized system, uh, there is a centralized unit which actually catering all the business area units. It helps in multiple ways. It first of all, uh, the common risk areas or common risk management functionality can be centralized so that they won't be redundant in every business units. Like performing the risk limit, that's a common risk area in uh, all the business unit desk. Like for equity desk, they are uh, trading limits are imposed. For fixed income desk, trading limits are imposed. So if we have that system centralized, we kind of removing the redundancies in the system. So it brings risk control closer to the key decision maker of the organization by centralizing it, and the better management of risk budget by reorganizing and diversification across business units and providing a centralization to all units, as I said. So when we studying about the corporate governance, uh, we talked about the risk management should be an independent unit, and the people who are involved in risk management unit should be independent from the people who are actually doing the risk management. So risk takers and risk managers, there should be a clear distinction, and the people who are responsible for the risk management should be reporting to the to to people who are actually involved in risk taking. So in this way, the independence and objectivity of the risk management process can be maintained. So the another system which is important is decentralized systems. Each business unit is responsible for its own risk control. So placing risk nearer proximity to the source of the risk. Disadvantage, it doesn't take into account of portfolio effect across the units. So there should be, as I said, there should be clear separation of front office and back office duties. Individuals who are independent of business should be responsible to the risk management. So they are board level committees are established, and these committees are accountable to the shareholders, and these individuals who are independent of business should be involved or should be head of those committees. And this risk management is essentially a separate area or separate separate unit within separate organization within the entire organization, which is involved in performing the risk management functions. In, in many cases, the hybrid system is followed, both centralized um, and decentralized at various trading desks. However, certain people they do prefer centralized system over the decentralized system because it, it just the common risk function can be centralized at one place.